Good morning. It's Monday, March the 16th. Here's what's on the agenda. President Trump wants help with the Straits of Hormuz. How will central banks characterize higher oil prices this week? And UniCredit offers to buy Commerzbank via an exchange offer.
Good morning, Anna. It's a brighter start to the week this week. We have futures pointing higher on both sides of the Atlantic following gains in the Asia session, modest gains. And as we look to oil, it's still above $100 a barrel. Traders reacting to the US attacks on Karg Island, Iran's main export hub, but drawing some comfort, it seems, from Iran's foreign minister, saying that the Strait of Hormuz is only shut to ships from enemies. Also helping the mood this morning, a decline in the dollar. It had ended last week at its highest level this year, but the Bloomberg Dollar Spot Index now down more than 0.1%. The countdown to the opening trade starts right now.
Good morning. So for the oil markets, we are in that third week of conflict when it comes to the war in Iran. And the focus really is and continues to be on the Straits of Hormuz and the decision by President Trump to reach out to those allies and say, we need help. That suggests to some that this is an administration, this is a US military, that cannot on its own reopen the Straits of Hormuz. They are reaching out to those allies. And so far, the response from Japan, the response from Australia has been a no. We'll see what happens to other allies. The UK is considering the offer. But even if they say yes, it will take time. And for me, that is one of the clearest takeaways. The US cannot, it seems, on its own, with its own naval capacity, reopen the Straits of Hormuz. The second part of the oil focus is what's happening in terms of Karg Island. And this is the export terminal for Iran. 90% of its exports ultimately go through this island. The military assets, Iranian military assets, it seems have been destroyed by the US, but not the oil infrastructure. How does Iran respond? And where does the US go from there?
Yeah, it's interesting because I'm not sure where the call on allies to participate fits into our understanding of risk on and risk off and the duration of this conflict. And that's the lens that every bit of news is being explored via, isn't it? But it does seem as if the markets are not greeting all of the weekend's developments around Iran in a kind of crazy risk off fashion. Certainly European futures are pointing higher. Oil prices are a little bit stronger, but only up by 1%, which in the context of recent moves, they've been up higher, but since faded a little. And I'll add into the mix of not signs of off-ramps, but things that the market is considering on the other side of all of the tension. India got some LNG cargoes through the Straits of Hormuz. So that speaks to Iran's point that it isn't shut for everybody. It is shut for most of the West, it would appear. Yeah, one other piece of good news is that oil loading at Fujairah, this key port in the UAE, has resumed after a drone strike and fire there. We had seen Dubai's main airport halting flights after a drone strike caused a fire. Flights, it seems, are resuming gradually there as well. Coming back to what you said about Trump calling on allies to help reopen the Strait of Hormuz, Tom, in particular, he's calling on European allies to help there. And we've got EU foreign ministers discussing the idea of expanding the bloc's naval mission from the Red Sea to the Strait of Hormuz when they meet today. But really, no officials saying that a decision is going to be imminent. And he's certainly calling on China to do more, isn't he? And giving a short interview to the FT where he talks about possibly pushing back that meeting with Xi if there isn't any assistance. And we're watching for the Foreign Affairs Ministry to see if we get any further commentary from China on that front. Well, let's come back to China because we've had some data out from them overnight. But I do want to just briefly talk about the wider market reaction here because we've touched on oil. Gold has been down near $5,000 an ounce again. And as I say, futures higher on both sides of the Atlantic today. Maybe a bit of optimism. It feels like traders are latching on to anything that they can be optimistic about here. But it is a better start to the week. Treasury yields a touch lower across the curve. Last I checked, still there. But, you know, Treasuries are raising all their gains for the year because of the inflationary angst. And it's a massive week for central banks this week.
It's a huge week for central banks. Before we get to the central bank reaction to this, is this still a market that is pricing in oil disruption versus an oil shock? The IEA saying this is potentially the biggest oil supply shock in history, potentially the biggest oil supply shock in history. The betting markets, Polymarket and others, are betting that the odds on this conflict coming to an end are below 50% by the end of May. So the betting markets do not see this conflict coming to an end potentially far out into beyond the end of May. So how the markets react. Are we still seeing complacency in these markets?
And how are central banks going to react to that? Because where we have seen reaction in markets is pricing in either no cuts or more hikes coming through from all kinds of global central banks. And they will be in focus this week as we will be trying to understand from them, how is this like 2022? How does this threaten to push up prices for many Western economies? And how is it not like 2022? Should you look through this and say it's transitory and it won't have second round effects? Certain economies, and I think about the Bank of England and the UK in this regard, certain economies, the underlying dynamics of the economy are a little bit weaker this time than in 2022, and perhaps that changes the reaction function.
Yeah, we spoke to Emma Moriarty on Friday saying that the BOE needs to look responsive, it needs to keep inflation expectations anchored, but there's a real risk that it makes the demand problem even worse. You could argue that Treasuries right now are focused on inflation, Tom, but maybe it is growth that they need to be focused on down the line, and this is where the difference between having a single mandate and a dual mandate really comes into play.
For some, this will be an opportunity. There's a lot of dislocation in markets right now. Could we see M&A put on hold as a result of all the market turmoil? Could we see more M&A happening in certain specific areas? And it's certainly the latter that catches our attention today as Italy's UniCredit makes a takeover bid for Germany's Commerzbank. So this is a late addition to our agenda this morning, breaking just 6 or 7 minutes ago. But UniCredit has made a takeover bid for Commerzbank, presumably triggering a protracted fight for the German lender, because we know that the politics in Germany has pushed back against this in the past. There's certainly been noises out of Berlin that have not been entirely favourable to this. But here's Orchel coming back once again with another attempt to take over this lender. And cross-border M&A, still such a difficult thing to get done in Europe.
And it comes to the question about banking union, and it comes, of course, to the domestic politics of Germany, to your point. The context is, of course, that UniCredit has already a 26% stake in Commerzbank. And to your point, the German government have made it pretty clear repeatedly that they oppose a takeover by UniCredit. So we'll see the response to that. But this is obviously a significant move once again from UniCredit and from Orchel in terms of building out that stake, taking a full takeover in terms of this potential bid for Commerzbank now. And the latest coming through from UniCredit. Yeah,
UniCredit indicated lower on TradeGate this morning. Interesting that the share price of Commerzbank has risen more strongly than UniCredit ever since that original possibility of a takeover bid. So we'll watch both at the open.
Yeah, and we'll certainly, absolutely. We'll look to see if Commerzbank jumps again on this. Let's tell you what else is coming up on the programme. Lots of really interesting conversations with our guests. Andy Briggs will be with us, the CEO of Standard Life. So we'll talk about the investment climate here in the UK. Private credit might get a mention. Insurance certainly in focus. Valerie Noel, C's trading head, will be with us. We'll also talk to the CEO of Statkraft, that's Birgitte Vartdal. That conversation a little bit later on renewable energy, gas. How are we evolving our understanding of the future energy mix for Europe as we go through yet another energy crisis? We'll also be hearing from Axel Igelt, who is the European Steel Association Director General. That conversation coming to us a little bit later on in the programme.
Let's also take a look at what else we're watching throughout the week. Today we have US-China talks in Paris, continuing from yesterday. We also have the NVIDIA GTC. This is known as the Super Bowl of AI, the GPU Technology Conference. The CEO of NVIDIA, Jensen Huang, delivering a keynote speech. Then tomorrow we have the RBA rate decision, one of the few central banks expected to actually move this week, a back-to-back hike expected. We also have President Trump hosting a bilateral with the Irish Taoiseach, Michael Martin. And then on Wednesday, the Fed rate decision, before on Thursday, the BOE, the ECB and the BOJ making their own rate decisions. We also, on Thursday, have Japanese Prime Minister Sanai Takaichi visiting the White House. And then on Friday, it is the EU Leaders Summit. Full coverage from our European correspondent, Oliver Crook.
We're hearing from the EU's Kaja Kallas on that point, saying we have to discuss how to keep the Straits of Hormuz open. Again, how Europe responds to this. Will Europe be pressured by President Trump, who says that NATO could face an issue if European allies and NATO allies do not help the US in terms of trying to open the Straits of Hormuz. We continue, of course, we're seeing live pictures right now of the top foreign affairs official of the EU, Kaja Kallas, speaking there ahead of this summit. Yeah, and the other thing that will be on the agenda is how Russia is being treated in the context of the Iran war. So Kaja Kallas also saying that the US move on Russia oil sanctions is a dangerous precedent. And so far, Europe has been very united in pushing back against any suggestion that it
will follow the United States in taking the edge off or reviewing or reducing any of the sanctions against Russia.
Yeah, there's been pretty uniform objection to that across Europe, to the response by the US to relax some of those sanctions on some oil, Russian oil, on those cargo ships currently floating on the oceans, and the fact that that could end up supporting, of course, Moscow and increasing their revenues around oil. Here's what else you need to know this morning. Dubai's Civil Aviation Authority has announced the gradual resumption of some flights to and from the city's international airport. Earlier flights were halted after a drone struck the facility, causing a fire at a nearby fuel tank. The world's busiest international hub has faced a series of attacks since the war started, regularly disrupting flights. In France, socialist candidate Emmanuel Grégoire has topped the first round of the Paris mayoral election as the left seeks to extend its quarter-century rule over the French capital. Grégoire won about 38% of the vote, setting up a high-stakes runoff for next weekend. In Nice, France's fifth largest city, Marine Le Pen's far-right candidate won the first round with 43% of the mayoral vote. And one battle after another has won 6 Oscars, including Best Picture, delivering a long-awaited win for filmmaker Paul Thomas Anderson. Michael B. Jordan won Best Actor for his performance in horror film Sinners, while Jessie Buckley won Best Actress for portraying William Shakespeare's wife in Hamlet. Netflix's K-pop Demon Hunters won Best Animated Film.
Coming up on the programme, EU foreign and energy ministers are set to meet today to discuss the fallout from the Iran war. That coming ahead of that EU leaders summit that takes place later on this week. We will go live to Brussels and we'll be hearing from the Lithuanian foreign minister as President Trump warns NATO would face a very bad future, in words he gave to the FT, if member states fail to help shipping in the Strait of Hormuz. But up next, we'll be joined by Robert Dishner, head of trading for London at Neuberger Berman, as European governments turn to thoughts of what they can do to help their electorates. How much money do they have for that kind of activity? If you have questions, if you want to get involved in our conversations, IB plus BBTV Go. That is the function to use this morning and every morning to get in touch with us. This is Bloomberg.
Demanding that these countries come in and protect their own territory, because it is their territory. It's the place from which they get their energy, and they should come and they should help us protect it.
President Trump speaking there, we could just about hear that, make it out, but talking about the need for others to come in and support the United States in his view. He was aboard, of course, Air Force One. Let's get to some breaking news. A red headline on the Bloomberg terminal tells us that the UAE's Fujairah port has been hit and there's been damage that is being assessed. This is according to people familiar talking to Bloomberg. So we'll look for further details on this. Let's go to our Bloomberg Horizons Middle East and Africa anchor, Jemana Basechi, who's in Dubai. Any thoughts on this, Jemana? Because, of course, the port of Fujairah had been taking on outsized importance of late, and there's a lot of focus on any kind of attacks on infrastructure that are for the energy markets.
Yeah, absolutely. It is one of the most important refueling hubs around the world. Very strategic port for the UAE as well. And I should say that it's on the eastern side of the Strait of Hormuz. So it's after the Strait of Hormuz on the Gulf of Oman. But if these reports are true, and indeed Bloomberg sources are indicating that the Fujairah port has been hit again, the damage is still being assessed. This would be the second such strike on this same port over the course of the weekend. Another strike took place on Saturday. It caused a significant amount of fire, limited damage, because by the end of the weekend, the port had resumed operating. But this would be a second attempted strike if indeed confirmed. We don't have a formal notice yet from the Fujairah media office. But I think, taking it in light of the most recent developments in the region, you have to recall that on Saturday morning, the U.S. struck Karg Island, which is an extremely important strategic site for Iran. 90% of its oil gets processed through there. Now, even though the U.S. specifically struck military infrastructure, not oil infrastructure, the reaction from Iran came very swiftly. And they said that any non-U.S. assets in the UAE could now be deemed targets, because in their esteem. They believe that the U.S. launched those strikes from the UAE. This is a claim that has been rebuffed by the UAE authorities over the course of the weekend, saying that it is not founded in logic. And yet, throughout the course of the last couple of days, we've seen Fujairah targeted. This morning, also an incident around Dubai International Airport. A fuel depot was hit as well. It briefly led to the suspension of flights. Air travel disrupted once again, though things have resumed now. It just tells you that things are not de-intensifying or de-escalating. And even though President Trump signaled over the weekend that Iran are willing to negotiate, we actually had commentary from the Iranian foreign minister. He gave an interview to CBS last night saying that they are not ready at all for a ceasefire. They're not ready to come to the negotiating table. And at the same time, they recognize that they still have very strong leverage over the Strait of Hormuz, despite the Trump administration's efforts to do what they can to reopen the Strait. So we're still very much in this standoff position between the U.S. and Iran as the conflict continues to escalate and even strike non-U.S. assets around the UAE.
OK, Bloomberg's Jumana Pasechi on the ground for us in Dubai with that update. Jumana, thank you. Let's get a broader take on these markets now and bring in Robert Dishner, Senior Portfolio Manager and Head of Trading for London at Neuberger Berman. Robert, good morning. Thank you for joining us.
Thank you.
Should investors start to price not for inflation, but for a growth hit?
Well, that's the exact right question. I mean, this is what we saw in 1990, in 2011, 2008, when we had these bigger increases in oil prices, and then you have the combination of higher commodity prices and potentially higher rates. We've seen rates increase dramatically over the course of the past 2 weeks, going from cuts to hikes in the UK, going from no cuts to hikes in Europe. So there are growth elements here that are quite different today than they were in 2022.
Where is your thinking in terms of pricing in two hikes for the ECB, pricing in one hike for the BOE, pricing in a single cut for the Fed? Does that seem like the right response, or are markets getting ahead of their skis?
Markets probably getting ahead of their skis a little bit. Just think about it. 4 weeks ago, we were talking about a paper how AI is going to destroy every job there is out there, and inflation and is going to be lower and these type of things. And since that time, we've gotten a jobs report that's negative in the U.S. We've gotten German factory orders that were quite negative, German industrial production that's been fairly negative. So are you sort of, increasing those growth headwinds by being aggressive if you actually go through with some of these hikes, as opposed to maybe just watching and seeing what happens? But you look at the commentary thus far from the ECB, it's almost a mirror image of what they were saying in July 2008. And we all know how that ended. And finally, this weekend, we're starting to get a few more stories comparing this, that this really isn't 2022.
OK, help us understand that a bit more, Robert. Good morning to you.
Thank you.
What is the mistake that you think the ECB might make?
Well, think about it. So in 2022, we saw mask mandates on airlines. I had to take a COVID test before I flew back to the U.S. Balance sheets.
Remember it well.
Balance sheets were, both at the corporate and at the household level, very strong, right? Spending really hadn't rebounded all that much yet from that period of time. At this point in time, we're through the cycle. This is late stage. And then on top of which, we have the impacts of AI, what that means for longer-term inflation expectations. And if you make
so does that mean that weaker growth environment then you're suggesting now?
Correct.
Weaker backdrop in terms of growth. So does that mean that the risks of a spike up in inflation are lower? Sure, we get higher oil and energy prices, but we don't get necessarily the secondary inflation.
Well, that's exactly right. Will we see this services inflation continue to carry through, which, to be fair, has been somewhat sticky? We just saw the higher print due to the Milan Olympics, those type of things. But again, if growth does slow, inflation will move lower.
Robert, you touched on the UK. We've seen yields up since the start of the war, and the government talking about how it's going to support households through the energy crisis. How much would the bond vigilantes actually tolerate here? I'm thinking about the fuel duty unfreeze that was promised in the autumn. It seems highly unlikely that that'll be coming.
Yeah, the UK it's a bit of a tough thing. Now, the one thing that happened is borrowing in the UK has actually been less than what was forecast. So is there some room? There's not a lot of room, but is there some things on the margin the UK can do? The UK can't do big grand programs like they did in 2022. Otherwise, you may see it. The other thing is, where does this funding happen? Does this happen in bills, or does this happen in in longer-term debt. If it happens more in bills, the impact probably a little less severe. In longer-term debt, maybe more severe.
The betting markets do not see an end to this conflict until potentially May, potentially the end of May, potentially pushing into June. What are the market implications of that? How would you position for that scenario? Where would you find hedges? Where would you unwind?
Sure. So what we're seeing is the longer this lasts, think about it, yes, inflation will be higher, but also the bigger hit on growth, right? This is both, we didn't talk about the impact on food prices. If we've looked at what's been going on with corn, soybeans, wheat, sugar, fertilizer prices, all these things are moving up. So these are already headwinds to growth, let alone healthcare costs that have been increasing in places like the U.S. And what we'll see is, and that's why this week is important, we have, 8 of the G20 report central banks this week. How are they seeing that, and what's their response going to be to those events? But again, sooner rather than later is what everyone's hoping for, and we're sort of hoping that the betting markets are wrong here.
So at what point do you see that inflection point, this demand destruction-induced reversal in treasuries?
Well, yeah, it's a great point, and I think we're seeing part of it already. Curves are flattening, so that means longer-end rates are selling off less than front-end rates. And what that's telling you is forward growth or forward inflation is going to be lower. And so the market's already telling you that you've got that demand destruction, and if central banks go through with some of these hikes, you may even see further flattening of the curve.
Yeah, we've seen European bond markets opening up this morning, Robert, and yields coming off a little bit. So speaking to your point that maybe markets are starting to think a little bit more about growth and maybe not quite so much about inflation, although oil prices still at 105, I note, on Brent up 2.5% now. So from central banks, do we just expect a lot of holding statements? And we were expecting a lot of them on hold when it comes to rates this week. But in terms of the commentary, a lot of holding statements to try and boost credibility.
Yeah, we think that there's probably going to be a lot of kick the can from most of the central banks. The exception really is the ECB potentially, right? Well, actually, 2 other exceptions, one of which is Bank of Canada, which also had a quite poor employment report on Friday. Markets pricing in close to 2 cuts there. And then the Bank of England as well. How does the Bank of England factor this when we had the softer than expected GDP print last week? But the ECB, we've heard from the hawks. We haven't necessarily heard from the doves yet. Do we hear from the full committee on Thursday, or does the full committee validate the hawkish commentary we've heard thus far from the ECB?
Could be confusing then if we hear if we're looking to them to talk tough on inflation, but at the same time acknowledge a weaker growth outlook.
Yeah, they're not in an easy position, right? And so, but the other thing too is we get forecasts from the Fed and we get forecasts from the ECB. So those are two very key points that are going to help us inform that decision making. And
you wonder to what extent they would be willing to diverge when these problems get more full down the line.
Exactly, and we've seen them diverge before in the past. 2011 is a great example. 2008 is another example. Frankly, 1990, the Fed was cutting despite an increase in oil prices.
Robert, great to see you. Thanks for coming in to see us. That's Robert Dishner, Senior Portfolio Manager and Head of Trading for London at Neuberger Berman. Thank you so much. Well, coming up, we'll be speaking to the Lithuanian Foreign Minister as President Trump warns NATO would face a very bad future if member states fail to help shipping in the Strait of Hormuz. That's next. This is Bloomberg.
Welcome back. This is the opening trade, 7:30 here in London. Futures are pointing higher despite the geopolitics. President Trump has said that NATO would face a very bad future if member states fail to help shipping in the Strait of Hormuz. The FT is reporting that EU foreign ministers are considering plans to widen an existing naval cooperation to include the crucial shipping channel. Oliver Crook is in a good position to find out more for us. Bloomberg TV's chief Europe correspondent joins us now from Brussels with a guest. Ollie.
Yeah, that's right. There's that EU mission that's already there patrolling the Red Seas to try to deal with the Houthi threat. The question is whether to expand that mandate to basically potentially touch the Straits of Hormuz. And we'll be very pleased to join to somebody who's going to be in these conversations with foreign ministers, and that is the foreign minister of Lithuania, Kęstutis Budrys. Thank you so much for joining us this morning. I'd like to begin just broadly to get your perspective now entering the third week of the war in Iran, what Europe's role should be going forward.
We should put our pressure on Iran to stop escalating in the region, stop attacking Gulf countries, Cyprus, other countries, and return to the diplomatic efforts to stop it. And then what is in our hands, so in the European hands, of course, we can put the pressure, and we have to put the pressure on Iran in the form of the sanctions, sanctioning their shadow fleet that is operating right now in the world, and also coordinating these moves with the Gulf countries first, that we have the strong partnership, and also with United States.
Do you think you could leave the meeting today with additional sanctions on Iran?
We will have the discussion. I doubt that it will be immediately adopted. It's not there yet, but there should be consensus that that's the way forward, how we should and have to contribute, because our fundamental interests, security interests, are also at stake here, because Iran's missile program, nuclear program, is also a threat to Europe. Of course, we have to be part of it.
And if you had asked members of NATO on Friday if this was a NATO problem, their answer would probably have been no. Today, after the weekend, President Trump has directly tied NATO potential involvement with NATO support from the United States. Do you think that NATO has a role to play here in the Straits of Hormuz?
If there is, or when there will be such a request, of course we have to look into it and consider it, and I would look for the in-depth debate with the NATO. No other organization has such strong operational planning capacity as NATO. So of course we should look into it, what we can provide. Well, that would be the question then for my country, what Lithuania can contribute to this sort of operation that affects the global oil prices and energy prices and the status of our economy.
And if you got a direct request from the President of the United States for NATO involvement, what would Lithuania's position be? Is that a yes?
Of course, we will look into it, what we can do. But politically, of course, we will be open to all the options.
And what about the European naval mission that's already there, Aspides? Should that remit be widened to basically involve the Straits of Hormuz? I know this is something that you'll be debating today. Is that something that you support?
It starts from capabilities, and it starts from interoperability with ongoing operations. It's not only political will to be part of it or not. It's also about the answers, how it will plug in and what will be the contingencies and then planning. I would put it into the NATO realm for their operational capabilities.
And a question here on Ukraine, because obviously there's going to be a lot of discussion about the consequences of the war in Iran on Ukraine, whether it's sort of being able to provide Patriot missiles or the Americans being distracted and basically negotiations coming to a halt. We also had this interesting interview given by the Belgian Prime Minister over the weekend in which he said that we should not be naive about Putin, but also we must normalize relations with Russia and regain access to cheap energy. What is your comment on that?
I hear a lot about the potential talks with Russia, and each time my first question is what we are going to talk about, what will be the potential result, how Russians will exploit the situation. I'm sure, I know, but how we will get anything better from the current position. We have to approach it from the position of strength, meaning that you have to have in your hands additional sanction package. 20th already passed, but then you have the 21st sanctions package, frozen assets. Then you have the list of the demands from Russia, what we want to achieve. We have to also declare very clearly what our red lines are, what concerns international law, and only then you can go to the talks and demand something and achieve something. But you cannot approach the diplomatic discussion with Russia from the position of loser. And this is the projection of weakness. We should stop talking publicly about it.
So these are comments that are not unfamiliar to hear from, say, the Hungarian Prime Minister, but it is a little bit different to hear it from the Belgian Prime Minister. Do you find that concerning, particularly going into UCO at the end of this week? Do you think that this is going to be a more active debate among European leaders of how to engage with Russia?
Of course, there will be the debate, and I really expect that the outcome of this debate will be conclusion that I just said. We cannot do this. So let's strengthen ourselves, and especially remembering the Belgian position on frozen assets. That's the stick. That's the leverage for the potential talks. We should use it. And what concerns Russian oil, believe me, we know it by experience on our skin. There is nothing more expensive in this world than the cheap Russian oil.
But then also the question on that, the people like the Belgian Prime Minister will be saying that basically we don't have any new ideas in Europe, that we need to basically have some new initiatives. Otherwise, the status quo is just going to bring us basically nothing, and the Americans are disengaging. So what are the sort of new approaches you think that the Europeans should be debating and should be pushing forward in order to sort of defy those arguments?
We don't need new ideas. We don't need creative thinking. We need political will to implement all the ideas and all suggestions. What concerns sanctions, that's the all energy companies. Still, Americans sanction more energy companies of Russia than we did. Rosatom, all the financial sectors. These are the old ideas. Let's go and implement them and execute. Frozen assets, let's do it. Just also, not only promise, but let's open the accession process for Ukrainians to EU. These are the things that we still cannot implement because of lack of political will. And I resist this direction that, we cannot do this, let's think something more creative. It's not about creativity.
Well, Minister Budrys, thank you so much for your time as you head into this meeting of European foreign ministers, where we'll be debating not only the European role in reopening the Straits of Hormuz, but of course the future of Ukraine and these sort of rising voices about potentially re-engaging with the Russians.
Our Chief Europe correspondent Oliver Crook on the ground for us in Brussels there. Thank you so much, Ollie, for bringing us that conversation. Well, let's turn back to earnings now. Here in London, just a few minutes ago, we did have earnings from Standard Life reporting a full-year loss of £394 million, exceeding expectations of a £247 million loss. And joining us on set, I'm pleased to say, is Andy Briggs, CEO of the UK insurer Standard Life. Great to have you with us, Andy.
Good morning, Lizzy.
You've got a new look. Phoenix Group is now Standard Life. What's your message to shareholders this quarter?
So three key things we want to get across in our results today. The first is that in an uncertain world we're living in, the UK savings and retirement market, the market we play in, is really exciting. It's large and it's growing strongly. Secondly, that we're very well placed in that market, so we're delivering strong growth in profits, a strengthening balance sheet. Last year we had £1 billion of free cash flow, so the business is performing really strongly. And thirdly, as you say, really excited about the future. We've rebranded the Standard Life, bringing our strongest brand to the forefront, and very much focused on helping more and more customers on their journey to and through retirement.
I hope you're proud of me not making a rising from the ashes joke in that intro, Andy. But look, how exposed are you to the cockroaches in private credit? We've heard a lot about the worries from various guests on this show. Are you having to reduce your exposure there?
So we have a very balanced, diversified business mix. What's quite unique about Standard Life is we're the only player focused at scale across the whole spectrum of all the parts of the UK savings and retirement market. So the private credit part is a relatively small part for us. We're very judicious in how we approach that. Everything is investment grade. We have a 500-strong in-house team, including all the credit rating analysts, so not something we're concerned about ourselves at all.
And that part, is it very exposed to software or the US?
Within our total assets of $317 billion, 40 billion of the annuity assets. Within that, private credit's about 3.7 billion. Less than 20% of that is the US, and no software within that at all, yeah. So very comfortable.
OK, so you're comfortable with the private credit exposure. Good morning to you, Andy. You said the three things, the three messages. The first of them was around the UK and it being an exciting environment at the moment. Just wanted to get your perspective on reserve powers, which the government has been talking about in terms of mandating investment of a certain percentage of certain funds in UK assets. I mean, either talk about the specifics or the big picture, what this means. It seems like a really interesting / dangerous precedent, depending on your view.
Yeah, so our strong view is that our customers will get a better income in retirement if they have a more diversified range of assets, including allocation to private markets. So we're proactively doing this. We're one of the leaders in the Mention House Compact and the Mention House Accord, which was looking to get a higher proportion, up to 10%, into private assets. We set up a joint venture with Schroders called Future Growth Capital. We've already invested over $1 billion of customer money into that. We want to get 10 to 20 billion invested there over the next 10 years. So we think this is a good thing for customers. We also think it's important that customers have choice. It's up to customers to choose where they invest their money. So we're not supportive of mandation, but we do think the direction of travel is a good thing.
OK, so you don't think, on Lizzy's point, you don't think it's a it's a difficult time to be putting more retail assets towards private markets, given the headlines?
So the way we think about investing our customers' money and indeed our shareholder assets is to have a view on strategic asset allocation over time, but then also to have a kind of tactical overlay to that. So what I describe is where we should go strategically over the long term. Of course, we will look at the timing of when we go into different markets. We'll spread that over time and do that in a careful and judicious way.
Andy, you've been in conversations with private capital managers about your kind of pension buyout business. Any progress, any updates on that front?
Yeah, so as I said a moment ago, we want to keep a very diversified business mix at Standard Life across workplace, retail and the annuities side. So the way we do that in practice is we basically focus on pension risk transfer business up to about 2 billion in size, and that's just under half the market. So what we're exploring is, could we partner with third-party capital that wants to come into the space, use our brand, our origination to focus on the market above £2 billion, and potentially at the same time get access to differentiated private credit. So that's what we're exploring.
Are you seeing appetite?
Yes, definitely lots of appetite. There's a lot of interest in the sector, and that's because, as I say, although the UK may have challenges a number of ways, the retirement savings and income market, I've worked in the sector nearly 40 years, it's never been this exciting, and that's why there's an awful lot of overseas capital wanting to come into the space, because the market is big and growing strongly.
Andy, one of the key challenges for Standard Life is to constantly be writing new business as your big existing life insurance books mature. Has that got more difficult, especially when you've got these new entrants in the UK pensions buyout market and some pension schemes holding off on their plans to pursue an insurance buyout?
No, so we had an excellent year for new business last year. So our workplace business, the gross flows grew up to £10 billion, so we're well into double-digit market share there. We also, over the last 3 years, we've grown our retail flows from 4 billion to 7 billion. So we're growing strongly across all the markets in which we operate. That's because we have real kind of scale and competitive advantage across those markets.
Do you see pension schemes delaying seeking buyouts? Does the price need to come down?
What we saw last year was there was a bit of a delay while there was a sense that maybe corporates could extract surplus from an ongoing run-on scheme, and therefore the market last year was a bit smaller for PRT compared to previous years. However, what we saw in the sort of second half of last year is actually getting back to a position where the trustees of the pension fund think the gold standard remains doing a buy-in or buy-out with an insurer, and equally employers are increasingly seeing the best way to get any surplus out is to de-risk by doing a buy-in or buy-out with insurers. So you've got over £1 trillion of assets in defined benefit in the UK, and our view is the vast majority of that will do a buy-in or buy-out with an insurer over the next decade.
Andy, thank you very much indeed.
Thank you.
As ever, Andy Briggs, of course, the CEO of Standard Life. Now, US Energy Secretary, meanwhile, Chris Wright, telling NBC's Meet the Press he's seeking global cooperation on reopening the Straits of Hormuz. Take a listen.
The world depends on the flows through Hormuz, and most importantly, the Asian nations, Japan, Korea, China, Thailand, India. A meaningful part of their total energy supplies come from the Straits of Hormuz. So, of course, the whole world will be united on the need to open Hormuz, and clearly we will have the support of other nations to achieve that objective.
OK, currently checking in on Brent, 106 right now, just above 106, up 3% so far in today's session. WTI back above $100 a barrel and up a little over 2% so far in today's session. More on the administration's push then for partnership, of course, and that focus on trying to reopen the Straits of Hormuz, that call to allies for assistance. We'll bring you the details and more analysis. Stay with us. This is Bloomberg.
Welcome back, everybody. This is the opening trade. 13 minutes until we get cash trading here in Europe. And European equity market futures point higher. US futures point higher, despite the geopolitics, despite higher oil prices. And we're up by just shy of 3% on Brent. Let's talk about these wider markets. Our Markets Live executive editor, Mark Cudmore, joins us now. Mark, it is an incredibly busy week when it comes to central banks, but most of them are expected to not do anything, keep policy on hold, talk a lot, no doubt, about inflation concerns, maybe growth concerns as well. If we were to get a surprise from a central bank, where do you think it would come from?
I think the most interesting one is the RBA. Will I call it a surprise? it's 2/3 price for a hike, or maybe a little bit less. And I think a hike is a real possibility tomorrow. But obviously with, 60-65% priced, either way makes it interesting. I guess the reason I highlight that one is it's the first of the major central banks to go. If they hike, it'll be the first time they've hiked for 2 meetings in a row in a couple of years. And it'll really kind of set the cat amongst the pigeons for kind of developed market central banks that they are potentially back in a hiking cycle after a couple of years of being in an easing cycle. So, yeah, that's the one I think that it's probably most interesting this week.
Mark, I'm curious in terms of your views whether or not there would be a market impact if this Xi-Trump meeting doesn't happen. Trump telling the Financial Times that he wants to see some support from China around the Straits of Hormuz. If that doesn't happen, maybe he delays, maybe he cancels that meeting. Is there a market impact for that? Is there anything priced in terms of this meeting, in terms of US-China relations?
Yeah, I think it would be taken negatively. I think we'd probably move on from it quickly. It's not the dominant theme at the moment. Obviously, the conflict's the dominant theme. But I think, people are assuming it goes ahead and assuming that we're going to get some positive headlines. We're used to the narrative here. The rhetoric comes out. We had a great shot. We got many wonderful deals. China's going to invest loads of money in the US. We solved many things. All is great. I threatened them loads. That's what we're expecting the line of platitudes to come from the US side. If the meeting's cancelled, he doesn't get that chance. So I think if it is cancelled, it would be a negative, but then we'd quickly go back to focusing on bigger issues.
Mark, on the point of Trump calling on others to help the US, what's the read for markets on the fact that few seem to be forthcoming right now? I mean, are you more bearish after the weekend's events, the commentary around the Middle East?
I am probably more bearish. I was feeling pretty negative on Friday. I'm feeling pretty negative again today. I mean, the MSCI All Country World Index is heading for its worst month since September 2022, worst month in almost 3 years. I still don't think they've fallen enough. The stocks keep on falling, but in this jagged fashion. They keep on bouncing back impressively in the European morning and then kind of heading lower later on as we realise there's no kind of salvation yet. So I think the outlook's very poor. And it goes back to your kind of initial question there, Lizzy. How are markets reading the fact that countries aren't forthcoming for providing support for the Strait of Hormuz? I think everyone knows that most of the world, barring probably Russia and Iran, want the Strait to be open again, and therefore people would like to help. But what is the goal here? I mean, Bloomberg had a story out of the weekend saying people are a bit confused what Trump's goals are. It isn't clear the US administration knows what their goals are. So, at the moment, all this does is highlight the fact that there's no easy resolution in sight. And that's why I think stocks need to price materially lower still.
OK, Bloomberg Markets Live, Executive Editor Mark Cudmore, still negative, more negative on stocks. Remember, you can get up-to-date analysis and insight from Mark, of course, and the rest of the team. Just go to MLive Go on your terminal. Let's get your stocks to watch this Monday morning with Charlie Wells standing by. Charlie.
Well, Tom, we're in such a headline-driven market right now. We have been over the past really 2 weeks that, again, we really need to focus on the stories that are causing a lot of movement because of headlines, and really that is energy. So taking a look at how traders are parsing some of the comments that we've heard about the situation in the Middle East, about the Strait of Hormuz, taking a look at some of these major European companies. Now, you want to kind of get a differential here. You want to kind of understand how to parse the difference between, say, a Total and, for instance, an Equinor that we're seeing on this screen. Well, Total, according to Bloomberg Intelligence, has the most exposure to the Middle East, while Equinor, you see they're outperforming, does not have assets there. And so, again, what we're seeing is some differentiation, but also a change in tune on how analysts are starting to think about some of these energy companies. We've got this insight from Bloomberg Intelligence talking about a potential earnings upgrade cycle as investors start to think about how these oil prices could have long-term longevity. So seeing how the market starts to parse some of these comments from over the weekend. Again, given that this is a headline-driven market right now, we've got to think about airlines. We've been hearing the news from Dubai Airport about a suspension of flights and then a resumption of flights. So seeing how that trickles at market open into some of these European carriers. So again, they've been under a lot of pressure given the uncertainty, but also given that, energy price that is really putting these European carriers under pressure. Now, I talked about headlines. I talked about this being a headline-driven market. There's a big headline that's been coming out about UniCredit, not related to the Middle East, but again, a really big story. Certainly going to get a lot of attention today about that takeover bid from UniCredit for Commerzbank. Now, take a look at the shares, right? Something that's been really interesting as we've heard about this takeover offer really since 2024, or at least that high stake that UniCredit had in Commerzbank, is the fact that Commerzbank shares have increased significantly since that time. So making a takeover more expensive. But again, thinking about share price, Commerzbank down about 18% year to date. So that could facilitate this a bit. But that is really a headline that we're going to be watching today.
Yeah, certainly. We'll keep an eye on the banking sector with all of that M&A in mind. Charlie, thank you very much. Cross-border M&A so difficult to do in Europe. And yet here we have another attempt at it from UniCredit with its sights on Commerzbank. But what exactly is the intention here? This is fascinating because I'm not sure that is entirely clear. The UniCredit CEO saying, well, firstly, this doesn't affect dividend policy, which is a pushback against any selling of the share price this morning, perhaps. UniCredit not seeking control, seeking dialogue with Commerzbank. And it seems that under German law, if they go over 30%, which this offer will take them, then they have to make an offer for the rest of the business. But it's not clear that they actually want to hold the rest of the business. So we'll see what that dialogue really entails.
The German government owns 12% of Commerzbank. UniCredit owns 26% right now. So the German government obviously will have that voice and has had that voice in the past. But you're right, we need more details. And Orchel coming out and trying to give some assurance around dividends and trying to suggest that he doesn't want full control of this bank, even as, of course, he looks to take a bigger stake.
And so we report the offer expected to be formally launched at the beginning of May, an offer period of 4 weeks, this according to UniCredit speaking today. So we'll watch both of those at the open. Also keep an eye on the UK house builders. We've had Rightmove, our favourite property website, many others available, of course. But we had a survey saying that the housing market in the UK is steady so far in March, despite the global uncertainty around the Iran war. Well, the open is in 5 minutes. We'll get to that next. This is Bloomberg.
Welcome back, everybody. A few minutes to go until the start of cash equity trading here in Europe. The session on Friday in the United States, a long time ago. We have oil prices a little firmer since then, up at 106 on Brent, up by 2.8%, as we watch European futures and US futures going higher. The mood music over the weekend has been, no signs of an off-ramp, no signs of de-escalation. Certainly, President Trump talking about wanting to involve other countries in what is happening in the Straits of Hormuz and trying to keep those straits open or reopen them, perhaps we should say. We have seen some Indian LNG supplies coming through, but very little else. And so the Straits of Hormuz and the duration, Tom, of the conflict that we're seeing in Iran still front and centre for markets.
To your point, European futures pointing very modestly higher by 0.2%, but that is looking fragile on this headline-driven day once again. US futures also in positive territory. S&P E-minis up 0.4%. Interestingly, European stocks were closed largely flat by the end of the week. They were softer by 0.5% on Friday, but across the week, largely unchanged European markets last week. Today, again, pointed to very modest gains of just 0.2%. In terms of individual names, what are you looking at, Lizzy?
Well, as you say, marginally outperforming. London's set to be marginally outperforming because we're minding energy stocks, oil at $106 a barrel. We're also watching European banks after that UniCredit offer to buy Commerzbank, and we're watching the airlines, not just because oil's fluctuating, but also because you may see European airlines under pressure as that war drives oil prices higher, and we've seen Emirates closing services at Dubai Airport and then reopening them, we report. So airlines, energy and banks all in focus this morning, Anna.
Yeah, certainly we'll keep an eye on all of those. Just moments to go then until the start of equity trading. Will higher oil prices, will that mean energy stocks continue to go higher, or will that start to prompt thoughts about demand destruction, and will that put an end to the strong run that we've seen for energy stocks? We will have to wait and see. Energy was in positive territory on Friday. Basic resources were firmly in negative territory on Friday. So these European equity markets then getting into another trading week, third week of war in Iran, and we see that the European equity market picture is pretty flat actually overall. We see the FTSE 100 up by around 0.3%. The CAC 40 over in Paris is up by 0.1%. The AEX in Amsterdam, incidentally, up by 0.4%, which makes my mind go to technology and wondering what is happening with that particular sector. But broadly speaking, don't have the DAX open yet, as is usual. Energy stocks are doing pretty well, and so that answers that question of whether higher oil prices are still a positive for energy stocks. And technology certainly in focus with the AEX moving higher, Tom.
The top two gaining sectors right now: technology up 0.6%, energy up 0.6 as well. Retail getting a bit of a boost, 0.5%. Real estate also gaining 0.4%. That's a story for the FTSE 100 as well, of course. On the downside, utilities, the biggest loser across your sectors, down 0.6%. Food and beverage down about 0.2. But again, across the sectors, you're not seeing significantly major moves, the relatively modest moves in the context, of course, of the broader benchmark up just 0.2% and continued uncertainty. But it's real estate right now, it's top of the list, followed by retail, energy and technologies in the mix as well, up 0.5% right now as a sector. Lizzy.
Yeah, I had said that we should be minding the UK house builders, but that doesn't seem to be where we're getting the strength in real estate, because Berkeley Group, Taylor Wimpey, Persimmon, all in the red this morning. In fact, Vistry Group down 2.3%, despite that Rightmove report that I had flagged. In terms of the banks, of course, we're closely watching UniCredit. Shares down 0.7%. We're waiting for Commerzbank to open, and it's a mixed picture across the rest of the sector. Airline, again, a mixed picture. IAG down about 0.5%, but Lufthansa up about the same amount. Air France flat. So it's a choppy day at the moment, Anna.
Let's talk about these markets then in a bit more detail, get some wider context. Valerie Noel joins us, head of trading at Seas Group, and a pleasure to speak to you, Valerie, this Monday morning. So European equity markets opening up for a third week of being entirely focused, or at least largely focused, on war in the Middle East and the duration of any war. Valerie, how are you positioning right now with that in mind, with a busy week for central banks as well?
I have to say that from a trading desk perspective, we can see that the market is not longer pricing fundamental. We are driven by headlines and then fundamental. And we have really seen that last week with this, Wall Street, who put the WTI down 19% in a few minutes. So this is clearly not normal. And it just shows how unstable the tape become with thin liquidity and fragile conviction. So I think the market is really vulnerable by the noise, actually.
Yeah, so vulnerable to headlines and headline risk driving things then, Valerie. What do you see in flows and investor appetite for defensive stocks versus maybe some of the other sectors? What is that telling you about risk appetite?
What we can see is maybe the retail and high net worth start to be a little bit fatigue or tired. We have seen some flow a little bit going down, more or less 20 to 30%. So it's not a capitulation that they don't do anything, but I think they are doing less. They're not full cash, it's just more selective. And we can see that they ask for protection. We have seen it on energy. They almost sell some single stock related to energy, but buy more ETF. They are coming back a little bit more on gold. Obviously, a Swiss franc, it's always a very good edge also. So, yeah, for now, I think they are supporting the market. So the support is not unlimited, but I still believe that people are just not fully cash, and we can see, and we are still, 5% lower than the highest in January. So I would say that people, yes, start to be more selective and start to buy this protection, obviously with what's happening geopolitics side.
Valerie, it's a big week for central banks. Good morning, it's Lizzy here. Even if most of the central banks stay on hold, how much could the tone from policymakers still shift equities this week?
Well, I think, almost all of them is gonna report. This week, I think it's a big week, but I mean, broadly speaking, no major rate move is expected from them. But I think the wording and that's going to be very, very important. It's going to be, inflation outlook may be more complicated. So maybe they're going to push central bank to sound a bit more cautious. So I think the wording would be very important, more than the rate actually. And also, that's one part of the biggest week. But we have also the triple witching on Friday, expiration of options. So I think this week can be quite volatile, especially at the end of the week.
You talked about how retail buying started to slow after this very strong run. I wonder, as we enter a third week of this war, are there different sectors that you're watching now in equities that could be affected that we weren't perhaps talking about in the first week?
Well, we've seen a lot of people, coming more to defense. You have talked just a few minutes before about everything about airlines. Obviously, is going down. We also have seen retail coming back on the Max 7, even if the Max 7 is down 10% since the high. We can see people coming back of what they know, the shares they know, and they come more defensive on some stuff, but they also go back on equity they know and they like. And us as a bank, we became more neutral on equity from a couple of weeks ago, and we have keep the cash for the moment. We didn't reinvest on something else, so we are more neutral on equity. But we still like, obviously, gold and commodities, agriculture for the moment.
Valerie, what is the rationale for gold? Because it has not performed during this conflict.
Yeah, I know, but the move was very, very high the last few months. But it's still a very good edge. I mean, for the moment, you can see maybe the gold is a little bit in favor versus maybe dollars, but is what's happened in geopolitical reason. The dollar also start to be a little bit edge. So we still believe that on the long term, gold is very important to have as the diversification, and we're still positive on it. On all precious metals, I have to say.
What would you have to see? Yeah, Valerie, what would you have to see across the equities? What would you have to see to become more constructive on equities? What specifically would need to come to bear?
I mean, for me, there is a hidden risk. We have seen, start to see last week about this, all this private credit. We have seen, Morgan Stanley and Cliffwater, they limited the redemption in private credit vehicle last week. And, when investors are gated in illiquid strategy, they often need to raise some cash from liquid asset. And this, for me, can be a contagion of what can happen. So pressure doesn't start in equity right now, but it can go through the equity. The volatility can come from asset to another one if people need to have liquidity. And for me, one of the bigger fears is like when you liquid winner just to actually funding reason rather than fundamental. That's not very good. We are not here yet, but I think that's something we need to be cautious and then overlook.
Yeah, Valerie, so if we do see some sort of contagion from that private credit story into other assets, you talk about equities. Is it more likely that investors would sell equity stakes or liquid public debt markets or gold holdings? What would people be selling that's liquid to try and cover themselves if they're not able to sell private credit?
That's a very good question. I think when you are forced to sell, you're going to set what actually you have gained some money normally. So then it depends what you have bought. But as I said, I talk about equity, but it can be something else. It can be crypto. It can be treasury. It can be a lot of things. But you need to be. Normally, people do the due diligence to what they're going to, what they gain and what they can sell, and so. I don't know exactly what they're going to do, but when you're forced to sell, you're going to sell what you have liquid on your portfolio.
Okay, so that's a clear risk factor for you in terms of the private credit markets and the linkages to other assets. Valerie, what's your take on the dollar right now? Do the gains that we've seen in the last few weeks for the greenback become do they get unwound pretty quickly?
I think the dollar can strengthen much more than maybe the market was expecting, even against Swiss franc. So it's really linked to the geopolitical stuff, and by the fact that we don't know now if the Fed's gonna reduce the rates. The market was expecting more or less 2 or 3 cutting rates by the end of the year. With what's happened, maybe the central bank will reevaluate what they have to do. So that's good strength for the dollar for the moment. But everything is almost linked. But we'll see already by the end of the week what's going to happen and what the market's going to anticipate. Yes, it's to be very cautious on every move that's happening right now. And as I said, it's more a headline market than a fundamental for the moment.
Valérie, thank you so much. That's Valérie Noël, Head of Trading at SYZ Group, CIS Group. Thank you so much for joining us. Well, let's check in on the core six, shall we? We have got the likes of LVMH and Rheinmetall in focus once again, and actually strength for LVMH. We did have that overnight, surprisingly strong data out of China, perhaps benefiting them. We also have Rheinmetall up 2.5%, following on from the developments in the Middle East over the weekend. Schneider is just in the red there, but greens for most of the core six this morning. Let's check in on some of how the individual stocks are moving this morning. Let's go to Charlie Wells. Charlie.
Good morning, Lizzy. So a lot of movement in that banking sector. Some really interesting headlines coming through about that takeover offer of Commerzbank by UniCredit. So seeing Commerzbank, which UniCredit is offering at a premium to their close on the 13th of March, we're seeing that in the green, up well over 4%. You see UniCredit there down a bit, slightly unchanged, but just down a little bit. There might be some concerns there about, say, execution risk, about the cost. We do know that Commerzbank shares, well, they're up right now, and they've been up since the disclosure of that 30% holding of Commerzbank by UniCredit back in 2024. So watching that deal news, the market liking what it's seeing, at least from the likes of Commerzbank. Also, we're keeping an eye on UBS because there were reports over the weekend that that bank would find out in April how much the Swiss government wants it to hold in additional capital. This has been a big issue for UBS over the past couple of years, so really focusing on that. We've been talking about M&A, and that's another thing that we're seeing in this market. We got to bring up the screen for Amplifon. So this is an Italian hearing care company. They have made some M&A news acquiring the hearing aid business of a Danish competitor. We're seeing that down significantly, 9.5% there. Could be concerns there about cost as well. Some of that, the difficulty there, some of the competition. And again, taking a look at how much red we're seeing there. I'm going to flip because we've got to talk about defense. This has been such a big story in the news as well. Well, look, before we get to defense, we just saw that green there from an energy company, I believe. But looking at Hensoldt, up over 4.5%. They got an upgrade from an analyst, and we know that given this environment, given the concerns that we're seeing, a lot of these defense companies are in the green, and we're seeing that from Hensoldt today.
Charlie Wells on some of the stocks on the move. Charlie, thank you. We're seeing Meta called higher as well, pre-market. This on a Reuters report that the company, of course, and the parent company of Facebook could be looking to cut about 20% of its headcount. They employ about 76,000 people, so we're looking potentially at 14 or 15,000 people if these reports are confirmed. But the stock is getting a lift on this, up 2.6%, reportedly to offset the heavy spend on AI capex.
Yeah, absolutely. Watching that one. And of course, we're still in that weird period, aren't we, where we get in the European time zone, pre-market, an hour earlier than we're used to. That's why it's happening in the 8 hour here in London, in case you're confused. And this goes on for another couple of weeks, doesn't it, before we spring forward here in Europe. Spring forward.
I like that, Anna. Coming up, talking of springing forward, more on UniCredit's €35 billion, almost $40 billion takeover bid for Commerzbank. We've been hearing from the CEO of UniCredit. We'll bring you the latest on that potential significant tie-up between the two lenders. This is Bloomberg.
Welcome back, everybody. This is the opening trade, 17 minutes into our trading day on Monday, the 16th of March. And this is the picture for you. Overall, not moving very far on these markets. And some of these major markets actually pretty range-bound, pretty flat. As we look ahead to a US session where futures are pointing higher, NASDAQ futures in particular up by 0.5%. We talked about Meta a moment ago. E-minis up by 0.5% as well. We have a lot of focus this morning on what's happening on energy prices. Lizzy, we're up by 3% on the Brent price and some of the energy names being supported by that. We're also very focused on the banking sector.
Yeah, and where we are finding some movement is in shares of Commerzbank and UniCredit, in opposite directions, mind you. On the news this morning that UniCredit's made a €35 billion bid for the German bank. For more, we're joined by Bloomberg's Tommaso Ebhardt, and good morning to you. What are we to make of this? Is it a bid? Is it not a bid? You've got UniCredit saying it doesn't expect to actually take full ownership just yet.
Yeah, let's try to unpack what's happened, a few minutes ago. So essentially, UniCredit launched a takeover bid in shares for Commerzbank, and so this is a fact. But at the same time, Andrea Orcel is saying we don't plan to take full control of Commerzbank with this bid. So why you're making the bid? So he's making the bid because UniCredit was already very close to 30%. Commerzbank is doing some buyback of its own share, which probably would have let UniCredit to cross the rest threshold. So making a formal bid with a very small premium, 4% versus the closing price, makes UniCredit in the position to then have free hands if they want to further raise their stake in the future, and somehow is telling the market, I'm here to stay and I'm here to open a formal dialogue with Commerzbank top management at this stage. So yes, it is a takeover bid. No, UniCredit is planning to take full control of Commerzbank with the bid. But yes, Andrea Orcel saying we are here to stay.
And Tommaso, you point to that 4% premium and you suggest it's modest. It is modest. And then you talk about the fact that they want to have talks maybe. Do you get the sense that Orcel is seeing something, hearing something within the kind of halls of power in Germany that may actually move this conversation further? How is Germany likely to respond to this?
So, as we know, Germany so far has opposed a takeover bid by UniCredit. It has said quite vocally they don't want UniCredit to make a takeover bid. What has changed? At the moment, we don't know. We are waiting to get, any feedback from the German government on this, from German authorities. I think that this is quite crucial somehow, that Andrea Orcel is coming vocally and say, we are still interested in Commerzbank. We have a stake which is getting close to 30%. We're making a bid to cross the 30% stake, which gives us free hand. So if there is a message here that Andrea Orcel is giving, is that we are here to stay and we are still interested in making this deal, and he's starting doing a takeover bid, which most likely he's saying won't allow UniCredit to take full control, but it is a bid.
Okay, so Tommaso, so it's interesting. So he's here to stay. He's keeping his options open, maybe suggesting if anybody is going to take ownership of Commerzbank, then he's certainly at the table. But are we any closer to getting any of these cross-border M&A deals done within the banking sector? Because so far they've remained elusive.
How many years we have been discussing about the fact, generally speaking, the market, that Europe needs strong banks to compete with the American, with the Asian, with the Chinese banks. This is something that every politician tell you is right to do it, but when it gets to actual bid, then we see again, nationalism prevailing. Let's see if UniCredit, Commerzbank would eventually be the first case when we get to a cross-border big deal in Europe to start, the creation of an independent, bigger, stronger banking industry in the European Union. We'll see in the coming weeks and months.
Tommaso, I think your exhale and your sigh there on that question tells us a lot, doesn't it, in terms of the prospects of banking union across the EU. Tommaso Ebhardt, thank you very much indeed with that update. And Commerzbank is up about 3.8%. The stock so far, UniCredit under a little bit of pressure, down a little over 1%. Back to oil now, gaining this morning as supply risks in the Middle East escalated following a second attack on Fujairah, a vital port in the UAE. For more, Bloomberg's energy reporter Anthony Di Paola joins us from Dubai. Anthony, let's start with the latest then. What do we know about this attack?
Good morning, Tom. There was another attack this morning that follows an attack on Saturday. We're still waiting to hear about what the damage assessment is there. Apparently, there were some strikes to some crude tanks on Saturday, and we are waiting to see if that's the same thing that's happened again today. What we do know is that there was a strike with drones, caused a fire in that industrial area there, and oil and crude loadings have been suspended there. The significance of that is that Fujairah is the UAE's main oil hub that's outside of the Strait of Hormuz. Of course, Hormuz has been shut off because of the conflict now, and so we're losing about a fifth of global daily oil exports and daily oil consumption that usually passes through Hormuz and goes from the Gulf to global markets. So that's completely cut off now. The only outlets that we had were two pipelines, a Saudi pipeline to the Red Sea coast in the west of that country, and then the UAE pipeline from Abu Dhabi's main onshore oil fields to the Emirate of Fujairah, which has access to the open ocean. So that's been targeted. That's a risk because ships will be reluctant then to call there if they know there's the potential of a strike. So we're still waiting to see if there is any real damage to the loading infrastructure there. But in any case, you could almost say that some of the damage is done by showing that that port is vulnerable.
Yes, a reminder that it isn't just the Straits of Hormuz that are proving to be difficult or impassable. Now, President Trump is urging NATO allies and China, Anthony, to reopen the Strait. What do we know about the pressure that President Trump is applying and what he is looking for?
Yeah, well, that's going to be a tall order anyway. I mean, so far we've seen these entreaties to allies done by some comments on Air Force One over the weekend and several social media posts on Truth Social. Asking allies to send their ships, saying that these countries, allies and non, he also called on China to come because those countries depend on Hormuz for their oil supply and for the exports that go mainly to Asia from there. But of course, we know that the market is a global one. So despite the fact that the U.S. has a sizable amount of oil production and even exports, the U.S. is still subject to those global market prices, which are up over $100 a barrel now because of this blockage at Hormuz. We have seen global countries come together. There is still a coalition in place to help vessels go through the Bab el-Mandeb Strait at the mouth of the Red Sea. So as we know, the Houthis in Yemen had been firing drones, missiles, some vessel attacks on shipping going through there, oil tankers, cargo vessels, everything. So that cut off a lot of traffic through the Red Sea going to that vital Suez Canal. That added time, added costs. The global economy is still adjusting and recovering to that. But the international coalition was really unable to fully open that and to fully stop those attacks. So we'll see an even greater challenge in Hormuz, which is a much more narrow passageway and much closer. It's right on the Iranian coast, so they have much more access to that. So it's going to be a big challenge if that coalition comes together.
Anthony, thank you very much. Bloomberg's energy reporter Anthony de Paula in Dubai. And of course, Lizzy, this takes our attention to renewable energy, which is increasingly in focus.
And indeed, we're going to be speaking to the CEO of Europe's largest renewable power generator, Statkraft, as electricity prices are projected to increase following this surge in oil prices due to the Middle East conflict. That conversation coming up next. This is Bloomberg. This is the opening trade. We're 30 minutes into today's session and we're treading water in European equities this morning. The Stoxx 600 is flat to the upside. We're seeing outperformance for the FTSE 100 here in London, up 0.3%, which corresponds with the gains we're seeing for oil Brent above $105 a barrel at the moment. We have seen a crucial port in the UAE hit again as it suspends oil loadings, hence the gains for the FTSE. But across the continent, Tom, this morning, pretty range-bound.
Yeah, not a big surprise to your point that energy is leading in terms of the sector, up a full 1% on the back of higher Brent and WTI prices, again, on what seems to be a ratcheting up of tensions and the conflict, of course, in Iran. Across the members, then, this is the breakdown on what is essentially, as Lizzy was saying, a flat market. You've got 242 members of the Stock 600 in positive territory. The majority, though, are under pressure in the session so far, down 340 stocks in negative territory. Volumes have dropped pretty significantly, though, down 40%, as you can see, versus the 20-day average. Let's flip the board and have a look at some of the individual names, the leaders and the laggards so far this Monday morning. There's some idiosyncratic stories as well. Abivax gaining, as you can see, almost 3% after Jefferies initiated coverage of Abivax ADRs with a recommendation of buy. Commerzbank, of course, really big story in terms of the potential merger, at least an increase of the stake by UniCredit. Currently has 26%, going for more than that. Commerzbank then gaining on the back of that Orchel move, up 4.3%. That is a potential 35 billion euro, $40 billion bid. HSBC, in the meantime, news on Friday that both HSBC and Standard Chartered are set to be among the first licensed stablecoin issues in Hong Kong. HSBC up just 0.5%. Let's flip the board and have a look at the laggards this Monday morning then. Amplifon. This stock, as you can see, down 5.6%, falling after news that it agreed to buy the hearing aid business of GN Stornord for about $2.6 billion. UniCredit is the flip side, of course, of the Commerzbank story with that takeover bid, or at least increased stake bid, currently down 1.6%. And Vistry Group falling 2.7%, dropping as UK home building pressure continues. Expectations that the BOE will not be able to cut rates as quickly as some had expected. The BOE decision, of course, later this week. Some of your individual stocks moving this Monday, Annie.
Let's get an update on some of the bigger picture stories we're covering this morning. Spain's Conservative People's Party has won its third regional election in as many months, while Prime Minister Pedro Sanchez's Socialist Party also posted a strong showing. The People's Party won 33 seats in Castile and Leon's 82-strong legislature, with almost all votes counted, with the Socialists increasing their tally to 30 seats. Economic data out of China this morning has surprised to the upside, with industrial production growing at its fastest rate since September. Retail sales also rose, while fixed asset investment unexpectedly expanded after contracting for the first time ever last year. And Iran is denying US President Donald Trump's assertion that it wants ceasefire talks, launching fresh attacks across the Persian Gulf and forcing a suspension of flights at Dubai's main airport. Trump called on world powers to help the US reopen the Strait of Hormuz by sending warships to provide escorts to commercial vessels, but none of the countries have so far said that they're yet willing to do that.
OK, let's get another view on the energy piece as we see that disruption in the Middle East as European oil and gas prices, of course, soar due to the war with Iran. Banks like Jefferies are betting that the conflict and reduced tanker traffic from the Strait of Hormuz will give clean tech another boost. Joining us now is Birgitte Vartdal, CEO of Statkraft, Europe's largest generator of renewable energy. Birgitte, good morning. Thank you for joining us in the studio. Let's just start broadly with how this conflict is impacting your business and how you would expect it to impact renewable energy in possibly the months and quarters ahead.
Yes, so in the short term, this of course leads to increased revenues and higher electricity prices, both for us and the electricity markets. This is not good, however, because it has a negative impact on our customers, on Europe consumers. Looking ahead, as you point to, this is an opportunity for us and for the industry, because Europe needs more renewable power to reduce cost, reduce emissions, and also increase energy security in homegrown produced electricity.
So just putting a pin on the here and now of higher prices, and you said that's not ultimately good. We know there are potential discussions in Europe about a price cap. Have you heard anything about developments on that front? Are we getting closer to some kind of price cap on energy prices?
Well, this is a discussion that we also saw back in 21-22 when we had the invasion on Ukraine, and the European Union concluded then to not introduce this. There were some countries that did do it. We are pushing for the same now. Marginal pricing is important in order to stimulate more renewable build-outs. It's important to use the most cost-efficient electricity source. And it's really the long-term solution is to build out more renewable, not to do a short-term adjustments.
Yeah, Birgitte, good morning to you. Can I ask you more about marginal pricing then? Because some people here, gas prices have gone higher, oil prices have gone higher. let's do more drilling and try and bring down those prices. And partly the reason they do that is because marginal pricing means that the gas price has more of an impact on just the gas price. It has an impact on what customers are paying for renewable energies. I mean, doesn't that sound as if it needs reforming in some way?
Well, marginal pricing is what almost all markets are doing, and this will drive the prices down over time so that we will build out more renewable power. Then I think I would turn the argument around. It's really because we have to import gas, because Europe has to use gas, that we see higher prices, while developing more renewable, building out more renewable will drive costs down. So we need to use these price signals to get more renewable into the system that will drive costs down over time.
So as a result of renewable build-outs and other changes since 2022, how much more resilient is Europe in the face of these higher oil and gas prices?
Well, it's better now than it was back in 2022. We see since 2020, the marginal price where gas is setting the price has gone from 72% of the hours to 40% of the hours. So this is a positive trend. We also see that in 2025, wind and solar generated more electricity in Europe than all fossil sources together. So both the marginal pricing and the EU ETS is really supporting the long-term trend for renewable that we all need.
But Birgitte, solar build in Europe stagnated as expected to fall in 2026, I think. Do you think that the stationary batteries, the electric vehicles which can charge during the day, will help to reverse that trend?
Yes, so we still have a significant build-out of solar, but it's not increasing year over year, but it's still a massive build-out. What you point to is that we see in the electricity market hours with negative prices because we have abundance of solar. So we need to install more batteries, both at home, we can use cars, as you point to, but also commercial batteries, and we need to expand grid. So these are elements that we need to bring into the system at a higher pace in order to adjust for the negative hours.
And what can be done, you mentioned the grid, to kind of reduce that bottleneck?
Well, it's to have a stronger grid across Europe, even within a country. You will reduce price differences between areas, and then you will sort of average out the prices and the consumption between one area that maybe has a lot of solar production, another area that has a lot of wind production, and with a stronger grid in between, you can complement each other with those sources.
And we were just showing images there of all kinds of renewable energy sources, Birgitte, one of them onshore wind. Do you see the policy restrictions around onshore wind in certain parts of Europe changing as a result of what we're experiencing right now?
Well, we have seen over the last year a push for faster permitting and more build-out. Then, to be fair, there are local opposition against some of the build-outs that we are also facing challenges on. Having said that, the growth is, we expect it to be 4 times the growth of what it's today in 2050. So we still think that because of the low cost, because of the clean energy, we will see more wind also coming into the system.
Do you think we look back in 2 years, 3 years' time and think this was a pivotal moment which catalysed an increased build-out and a shift into renewable energy? Because we could have made that same assumption about Ukraine, and it didn't happen. We opened up coal mines in Germany. We imported more gas from the United States. We talked about reopening nuclear power plants. How pivotal, how consequential potentially is this moment for that renewable shift that has faced that domestic political pushback?
Well, I actually think Ukraine was also a pivotal moment because we have, so the European Union came with the Repower EU. They reduced the permitting time. They really had a push for more renewables. And if you see the growth of renewable over the last few years and the speed that takes over for fossil fuel, I think that was supporting it. And now, as you point to, this is another opportunity because what we see and that we saw then is that it's when gas prices are high, it's when we get these demand shocks that prices are going up. So with more renewable into the system, we will bring costs down over time. And I think that's the understanding that we need to bring forward.
And that statistic you gave us earlier, I think, is really pivotal then to that point that Tom's getting at, that and that you made earlier, that in 70% of cases previously, the gas marginal price was setting the price, and now it's 40-something, you
Correct.
said. So we are a lot less affected by gas prices than we were back in 2022. So when you see European leaders gather and they all want to do something and say something, is your advice then, of course, do what you want to do for the most affected in society, but don't change the system? You think that the system is fine?
Yes, we believe that the system is what will bring us forward, but we of course understand that there is a need to look at compensation mechanism. But rather than changing the system, let's rather look at some compensation at the back for the society.
Are you facing supply chain constraints right now as a result of what's happening in Iran?
In the short term, not so much, but we expect to see that coming if this crisis extends, for sure. And also inflation will go up and our supply chain will.
So that's largely a cost impact that you expect across your business?
It's a cost impact, and it may lead to delays in our project, but it hasn't shown up yet. But if the crisis extends, then we expect to see
How
that
long
as well.
does it have to go on for it to be a difficult time for you?
Probably a few months, and then you will see delays sort of having a bigger impact on our projects. We are currently constructing 30 projects across Europe. We have a pipeline of 400 projects, and we need to move these projects forward all the time. And with longer sort of extension of the crisis, the more this will hurt our business.
Okay, Birgitte, thank you so much for coming to see us. That's Birgitte Vartdal, Statkraft CEO, with us in studio. Well, coming up, we'll be speaking to the Director General at the European Steel Association about the disruption in that industry caused by the conflict in Iran. That conversation next. This is Bloomberg.
Welcome back to the opening trade. We are 45 minutes into our session, and things have deteriorated in terms of risk appetite just a little bit over the last 45 minutes. So we're down by 0.2%. The FTSE still just above the flat line, but we do have the CAC 40 now down firmly in negative territory, down 0.3%. Basic resources and banks and autos are the worst performing sectors. Energy and real estate doing the best this morning. Let us put geopolitics front and centre once again. Aluminium Bahrain has started a phased production shutdown at the world's largest single-site smelter. The company, which is known as Alba, is trying to preserve its inventory of raw materials and keep other parts of the plant operating. Alba's move comes as the metals industry braces for widespread supply blockages. Let's get now to Bloomberg's chief Europe correspondent, Oliver Crook, who's in Brussels with a guest. Ollie.
Yeah, that's right. And as sort of Europe is trying to get its arms around all the secondary impacts from this war in Iran and the sort of the disruption it has created to obviously supply chains, but also to energy prices, we're very pleased to be joined by Axel Egert, who is the Director General of the European Steel Association. Of course, steel being one of the most important commodities that is produced in Europe for everything from building, housing, naval ships, the full defense build out, but also one of the most energy intensive and thus one of the most sensitive to the activity we've been seeing in the Gulf. And I'd like to begin, if we might, just by quoting one of your reports that came out back in December. You said that there was the negative conditions were unchanged. U.S. tariffs, trade disruptions, economic and geopolitical tensions, protracted weak demand, still high energy prices all continue to weigh on European steel market. That is now, in almost every category, much worse. What is the situation as we stare down the barrel of this now conflict in Iran?
Yeah, we are actually in a perfect storm, if you want to say so. The impact of the Middle East crisis has again a quite significant rate on our industry. Gas prices have increased by 50% over the last 3 weeks. So that has, of course, a direct negative impact on our industry. It has an impact on the margins of the company. So we have already very slim margins, and that, of course, is a major setback, and the crisis should not take too long.
And so help us sort of understand kind of more concretely what it's going to mean for steel producers. Does that mean that they're going to have to shut down capacity because it is no longer sort of economically viable? Does it mean more job cuts? For example, in the German economy, we saw 10,000 industrial jobs cut every single month last year.
Yes, indeed. If this crisis takes longer than expected, then of course it will have exactly the impact you just described. But we are hoping that this will over in a few weeks' time, so that we can come back on a basis where the EU has actually started to support our industry. We will have a new steel trade measure tackling global excess capacity. And if that comes into force on 1st of July, it could have a positive impact for our industry.
And I want to get to the European measures in just a moment, but in terms of that timeline that you're talking about, when is the sort of critical moment? At what point do you really grow worried when this war drags on for another, say, how many weeks?
Yeah, several weeks. I cannot predict how long this will actually take. But
when is the sort of flashing red for danger for the steel industry? When is it really a critical moment?
I would say 2 months is getting really critical. It also depends, of course, on our downstream industries. Demand, yes. What will be the impact on demand in the EU steel market? And that is determining the fate of our industry.
Yeah. But of course the EU was founded as a steel sort of union back in the 1950s. Now in 2025, last year, you just told me that they produced the least amount of steel ever in their whole history. So in the year 2026, what does the EU need to do to support the steel industry?
We believe there are 4 or 5 issues to solve. First of all, bring down electricity prices to around about 50 euros per megawatt hour. Secondly, solve the global steel overcapacity spillover impact on the European steel market. There we hope the new steel measure will come into force 1st of July. Third, fix the carbon border adjustment measure, where we should have a level playing field on carbon costs, which only EU players are paying today, but not the imports. 4, we need to have made in the EU for greener steel made in Europe. Otherwise, we will have problems to really come back on track in steel production in Europe.
So you mentioned a few things. I'd like to get into the details of at least one of them. There's going to be an active debate this week as energy ministers convene as we speak right now to discuss, but also at the end of the week, European leaders, the question of the emissions trading system that exists within Europe, which is seen by some as just a massive tax on energy. Others are saying it's an effective climate target. Of course, a lot of the European steel companies have been adapting their business models to conform with the ETS. What is the view from the steel industry in terms of what should be done with the ETS?
The emissions trading system is definitely a tool that can work. The disadvantage we have here is that it's a unilateral tool. It's only applied to European industries, not to those who are importing products from outside the EU. So that's, of course, an issue. We have a crisis today. That does not mean that we should abandon the ETS, because a number of our companies are already transitioning to low-carbon steel making. Others have more difficulties. For example, in Central Eastern Europe, we have companies that do not have access to cheaper electricity, that do not have access to funding for capital investment in new technologies. So there the situation is much worse than, for example, in Scandinavia. From that perspective, we need a balanced approach. What we are asking as a European steel industry is not to abandon the ETS, but to slow down the CO2 free allocation phase out.
Okay. And then also talking about the other theme that is obviously is top of mind for the steel industry, trade, the tariffs with the United States now currently on 50% for steel and, of course, the sort of derivative products. What are you hoping to see in terms of those negotiations? And as a second part of that, the consequence that we've seen from U.S. tariffs on the Chinese side, how concerned are you from dumping from there? So both the U.S. and China.
Yeah, first of all, we lost 30% of our steel exports to the US in just 6 months after the 50% import tariff by the US last June. So this is, of course, a shock for our industry. On the other hand, there was agreement with the EU that there should be a discussion how to tackle global excess capacity together with the US. So we hope that we will come back to that discussion in the next few months. Secondly, impact from China is significant. We have quite a number of trade defense measures on Chinese steel, anti-dumping, anti-subsidy, but currently the Chinese are able to undercut this again and export again significant volumes to the US. So it's important to tackle this again.
And something we've talked about a little bit less are these trade deals that have been struck with Latin America, with India. They're not fully implemented, but I'd like to get your appraisal from the steel industry and what effect this could have on the European steel industry.
First of all, it could have a positive impact because our customers, the automotive industry, for example, is exporting to Latin America. So there are some opportunities there. The automotive industry has had less possibilities to export to India because of the protected market in India. The opening of the India FTA, of that market, for the automotive industry could also help us.
Well, Axel Egert, thank you so much for your time. Director General of the European Steel Association there, called Eurofer, on all the issues that are affecting the steel industry, a very long list of them, added only by the war in Iran. Lizzy.
Oliver, thank you so much. That's our Chief Europe correspondent, Oliver Crook, in Brussels. Thank you. Well, let's take a look at what else we're watching throughout the week. Today, we have US-China talks continuing in Paris. We also have the NVIDIA GTC, the CEO, Jensen Huang, delivering a keynote at that GPU technology conference. Then tomorrow, we have the RBA's rate decision, one of the few central banks actually expected to move, a back-to-back hike expected here. We also have President Trump hosting a bilateral with the Irish Taoiseach, Micheál Martin, before on Wednesday we kick off with the rate decision from the Fed, before on Thursday the BOE, ECB and BOJ rate decisions. We also have the Japanese Prime Minister Sanai Takaichi visiting the White House, and on Friday the EU Leaders Summit. Tom.
OK, let's bring in Skylar Montgomery-Koenig right now from my MLive team. Skylar, is this a market this week that remains captured by headlines versus fundamentals?
Yes, I mean, absolutely. We haven't really gotten anything new over the weekend. I think, if anything, markets are a little bit more worried about the conflict being protracted. If you look at betting markets, there's more worries now that'll go into kind of April and May. And that's quite negative. And I think what's also negative is just this idea that if you have an environment where you get continued uncertainty, that's a negative in itself, because you get pinged around by these headlines coming through. You have to react to them, because if you do get the move, it will be quite large. And so you have this heightened volatility, this choppiness, and that's negative for equities in itself, because it means that if your economic environment is more uncertain, that means cash flows are more uncertain and you should demand a higher equity risk premium. It also means that financial conditions are automatically tightening, so you get wider spreads, higher equity risk premium. That means that there's less confidence and you have, less buybacks and issuance. And you also get this mechanical de-rating, or de-risking rather, when volatility is elevated, because some strategies have to sell automatically when volatility is high of that high volatile asset into other things.
OK, and it's a big week for central banks. The RBA is up first. If we're going to get surprises this week, Skylar, where are they going to come from? Maybe that's an impossible question to answer.
Yeah, I mean, I can tell you where they're not going to come from, probably the ECB. I think the RBA is interesting from the perspective of back-to-back hikes. And it's also interesting because despite the Australian economy being relatively small, when we had a hike from them in February, there was a feed through to other markets. There's not a lot of comparisons that you can make between Europe and Australia in terms of one's an energy exporter, one's an energy importer, etc.
And they were already hiking, right?
Yes, and they were already hiking. But I think you'll still likely see spillovers, and the spillovers are most likely to be in those kind of fiscally vulnerable economies. So the ones that have a tendency to underperform during a sell-off like the UK, or the economies that were already at the end of the cutting cycle. Markets always look for hiking cycles as soon as the cutting cycle ends. And so there's kind of this bias to want to look for that, and that's Europe and Canada.
Do you know what's weird? Oil's up, but traders are trimming bets on ECB and BOE rate hikes. Weird one. Skylar, thank you for coming in. Skylar Montgomery-Koenig from our MLive team there. Thank you very much. Well, we are looking at a pretty range-bound session here in Europe. The Stock 600 flat to the downside, and not a whole lot of movement elsewhere on the continent. That's it for the opening trade. The Pulse is up next. This is Bloomberg.